Fraud is not only about the financial losses, but also the public humiliation of having your control failures aired in public. We've got 5 FBI embezzlement cases for you: the Enterprising Reseller, the Bank Accomplice, the Back to Basics case, the case of the Spreadsheet Shenanigans, and the case of the Multi-Faceted Embezzler. Stick around while we share a brief synopsis of how they each committed their crimes, along with suggestions that might have helped their organizations avoid the debacle that incurred. And we know about these cases because I read about them on the FBI website. And if they were on the FBI website, that means they were also in the public domain, if you will. They were in the local newspapers. Not a good scenario. Okay, so case number 1, the Enterprising Reseller. In this case, an employee went out and purchased popular electronic equipment, things like cell phones, tablets, etc., activated them on the organization's website. I can't remember at this point whether it was a hospital, it was some organization that got NHA grants. So there was, a bit of money going through. Activated them for a very short period of time, deactivated them, and then resold them in marketplaces, in reseller marketplaces. This particular case, the employee netted about $600,000. Now, you might be thinking in your mind, you may have read Yale University had a similar problem, except in their case, the scam was for $40 million worth of equipment, and it involved computers and tablets, okay? So back to our story. The key in this case that made this embezzlement so successful for so long is that the purchaser knew what the company limits were, and they kept all purchases under $10,000. If for some reason they weren't under $10,000, then they broke them down into smaller amounts, which everybody listening to this knows is an internal control failure. Okay, and in 1 year, they purchased 8,000 iPads and Surface Pros. This was actually at Yale, and Yale has said they are working to identify and correct the gaps in internal financial controls. The Yale case was discovered by an anonymous tip. So for everybody who has an anonymous tip line, be it an email one or a phone one, know that they are the recommended best practice, probably the best way to uncover fraud, unfortunately. Now, suggestions on what might have helped in the original case. If periodically the company looked at purchases by employee just under the approval level, they might have found an inordinate number of items purchased, and they might have investigated further. And this is true, and this is a good tip, by the way, for any sort of purchase, any sort of approval. So whether it be expense reporting, IT purchases, or just purchases in general, look right below the dollar threshold of where people are allowed to approve. And if you see a large number of purchases or approvals, then you want to investigate further. By the way, I realized I didn't introduce myself. I'm Mary Schaefer, founder of AP Now, the place where we focus on all issues related to accounts payable and payments. Okay, the next case I call the case of the Bank Accomplice. Okay, and in this case, what happened is the employee in question set up a bank account in the company's name and funded this bank account with company transfers, and then paid their personal expenses out of this account. Now, problem number 1 is that one person was able to set this account up. It did not require dual signatories. Now, even if it did require dual signatories, the person still might have been able to maneuver around it, but that is one way. The next thing that happened here was lack of appropriate separation of duties. And in this case, and in every case, and hopefully you're doing this in your organization, the person who does the bank recs should not be the person who has signing authority on the account. And by signing authority, we mean the right to obviously sign checks against that account, but approve payments, okay? You want to have appropriate separation of duties. I want to point out one more thing. It wasn't germane to this case, but instead of setting up a new bank account, if that person had taken advantage of an existing bank account that was inactive, they could have perpetrated the same fraud. So another little tip, if you will, if you have inactive bank accounts, close them. Don't leave them lying around for someone to take advantage of. but to use them to perpetrate whatever new scam they're coming up with. Okay, the next one, case 3, I just call this back to basics, because what this individual did is they relied on an old fraud scam, and that is they submitted fraudulent invoices for services not performed. Now, some suggestions on how you can catch that. Do the three-way match, but obviously if it was services, there's going to be no receiving documents, if you will, and also require dual approvals. When you require dual approvals, especially on services performed, you want to make sure that both people have access to information where they can verify that that work was actually done, and it's not one person just taking the other person's word for it. Okay, now before we discuss the last two really imaginative cases, I'd like to invite you to hit the like or the thumbs up button. We generally produce broadcasts 3 times a week. Tuesdays and Thursdays, like this one, are for accounts payable and payment issues, including fraud. And on Saturdays, we share some videos about my newest obsession, Wordle. Okay, case number 4. I call this the case of the spreadsheet shenanigans, okay? And in this case, what the person in question did is they made fraudulent entries to the payroll system, either by directly entering fraudulent payment information online into the system, or by manually adding lines to the spreadsheet of payroll payments after the spreadsheet had been reviewed and approved. Now, if somebody could go and add lines to the spreadsheet and still upload it and have the payments made, the approval process was meaningless. So what could the company have done to, hopefully not fall into this position? Number one, an after the fact audit of the total amounts paid compared to the amount that was approved. That would have caught it right away. And again, 2 people being needed to enter data into the payroll system if they're going to be manual entries. And again, both people should look at the documentation. It shouldn't be one person going ahead and doing it, initiating the transaction, and then telling the other person, oh, just go in and approve it. It's okay, okay? We see that a lot, especially in the situation of a supervisor and an employee, or the boss and the employee's not going to go against the supervisor, or at least most of the time. Okay, so audits would have helped there. And then the last case is the case that I call the multi-faceted embezzler. And in this case, the embezzler, if you will, used several techniques. Number one, she used company credit cards that were both in her name and names of other employees to make unauthorized purchases, which turned out to be personal. Now, she shouldn't have had access to other employees' cards, and she should not have been able to use them. So that also means that after the fact, nobody was doing a review of the transactions that went through on the company cards, or maybe she was doing the review because it was a review of people who reported to her. I'm not real sure on that one. But okay, tighter controls around P cards, definitely. She also directed unauthorized transfers from the company bank account to her account, and she diverted customer revenue received in the company's electronic payment account. Oh, and one last thing, relying on that old chestnut, she submitted fraudulent invoices for payment. So she took advantage here, and I think it was a she, of many different aspects. What could have protected this organization? Well, first of all, appropriate separation of duties. One person should not have access to all these different accounts, etc. A review of the credit card transactions, and where appropriate, a 3-way match. And one last thing, nobody should be approving payments where they're going to be benefit. And lastly, where there were services involved, and you notice that a lot of these frauds did have services involved, you want to have some proof that the actual work was done. Now, you may think you've got it all under control when it comes to employee embezzlement, but some employees can be really tricky about the way they maneuver around approval limits. That's why we made a short video on this issue that you should really watch now. A link to it is in the show notes below and should appear momentarily on YouTube. As always, we greatly appreciate those thumbs up, those comments, those shares, and the subscribes.